day. I'm Chartered, your accounting tutor. In today's video, we are going to continue from books of original entry. Books of original entry. Mind you, we are treating books of original entry logically. We have finished the cash book, finished the journal proper. Today, we are going to continue with the other books. We have the sales day book and the purchase day book will be treated in this video. And then we are going to give illustrations and they demonstrate how they are posted in the respective accounts. Number one, let's look at the sales day book. What is the sales day book? The sales day book is a book of original entry into which all credit sales, that is goods sold on credit, are recorded. All credit sales are recorded in the sales day book. I want to emphasize that these are goods sold on credit. So most learners are confused. For example, if you say furniture on credit, it should not be recorded in the sales day book. The emphasis of sales day book is that it's only goods, that is goods that are meant for resale. When they are sold on credit, then you record it in the sales day book. So the sales day book deals with only goods that are sold by the business on credit, not non-current assets or any other thing, but only goods that are meant for sale. So let's look at the example here. We have on the 5th of March 2026, sold goods on credit to ABC Limited at a trade discount of 2%, 10 bags of rice at 18,000 each. Here in books of original entry, just like the card book, most transactions are subject to what is called the discount. I also want to clarify discount. We have two types of discount in accounting. We have what is called the cash discount and the trade discount. Most learners don't know the difference between the cash discount and the trade discount. Trade discount is given when goods are even purchased on credit. Whether the buyer or the seller is paying money or not, trade discount is given. But cash discount is given strictly only when cash have been paid or cash have been received. So that's the difference between trade discount and cash discount. And cash discount have two types. We have the discount received and discount what allowed. And this only occurs when payment occurs, either by cash or by bank. But trade discount, whether payment occur or not, trade discount is given. That's why it's found in credit transaction. So here there's a trade discount of 2%. And how many bags? 10 bags of rice at 18,000 each. Let's see how we record it quickly. This is your sales day book. The sales day book is drawn in this way. We have the dates, we have the particular, we have the folio, we have the details, and we have the amount. You come here there's nothing like debit and credit. There's nothing like debit and credit, and that is why the sales day book is a bit straightforward compared to the card book or the journal proper, because there's no debit and credit. It's one first recording whereby you have the date, you have the particular one, the folio, you have the details and the amount. Then first, if you have detail, you have to put the name of the customer on top. Like here we have ABC Limited. Then you describe the transaction in very brief form. Like here, don't say 10 bags of rice. And then you now say 2% trade discount. Then I told you that here, this is where you use SL. I told you already bring out a video on how folio is used. This exactly is where folio is used SL. SL means sales ledger 1, whereby all credit sales are being recorded. So SL1 means transaction on credit that have to do with sales. So this is sales ledger 1. Come and give out the detail. This is 10 bags of rice times by 18,000, give me 180,000. Then 2% means, this is 2%. If you know mathematics, 2% is 0.02 times 5, 180, give you a discount of 3,600. When you now deduct 3,600 from 180,000, you get what? You get 166,000, for which is the net amount. Mind you, in accounting, the net amount means an amount after a particular amount have been deducted. And mind you, in accounting, when a figure is put into bracket, it means deduction. We must not put a minus sign in. We don't use minus sign or positive sign in accounting. So anytime the figure is put in bracket in accounting, it means you have to deduct it from the other figure on top. and that is why we have this. Then the next one we have on the 6th of March 2026, we sold goods on credit to Miss N. Here, there is no trade discount given. There's no trade discount. Goods sold on credit to Miss N, 50,000. You come and record it here. Here is straightforward because there's no other detail. You just go straight forward and record it. Now say on the 6th of March 2026, Miss N, then this is sales ledger 2 because goods are sold on credit. You use sales ledger as follow. Sales ledger 2, the one that follow ABC Limited. Then the amount is 50,000. But mind you, this line is very important. You close this line to show that this transaction is separate from the, you must draw this line. You should not leave the whole transaction open. After a given transaction, you must remember to close this line. And don't close it off. Because this side, the totals are going to be summed up at the end of the day. Even if you have up to 20, 15, 10 or any number of credit sales, after all, you now sum them out to have one total that will be transferred to the sales ledger account. So now that we have ended sales ledger to 50,000 and we have only 2 transactions in this illustration, then you have to sum them out. But I'm repeating, don't close it, but you must close this line and stop at this point so that the totals can be added at the end of the month. When you add this 176,400 with 50,000, we are going to have 226,400. That is the end at that month. Then what do? This is how to balance it all. You now say at the end of 31st of March 2026, you now say transfer to sales ledger account. Mind you, the definition of books original entry says it is books into which transactions are first recorded when captured from the source documents before transferring to the ledger. So this is credit sales which are being captured first in the sales day book. After they now transfer it to the main ledger called the sales ledger. And sales ledger is under general ledger. I've already explained that very well under folio. Sales ledger is under general ledger. They now say transfer to sales ledger account general ledger 1, which the total is 226,400. And mind you, you must close with 2 lines. These 2 lines is very, very important to show that the account have closed for that month, which is 31st of March or 20% or the year as the case may be. Mind you, this is how a sales day book is being prepared and it is very clear. If you follow, you don't have any issue. The transaction, if you are up to 5, 10, 20, any amount, you just follow the procedure and you get it right. That is the format. Next, let's go to the next book, which is called the Purchases Day Book or the Purchases Journal. What is Purchase Day Book or Purchase Journal? The Purchase Day Book or Purchase Journal is a book of original entry into which all credit purchases are recorded. All goods purchased on credit by the business are recorded. Mind you, I'm repeating, these are goods purchased for resale. That is what is called purchases. If assets like motor vehicle, furniture, equipment, anyone that is not goods is purchased on credit, if you take it to the Purchase Day Book, you will get it wrong. Here the emphasis is only goods that are purchased on credit. So let's look at the illustration. Here we are saying both goods on credit from Mr. Teso at a trade discount of 1%, 40 bags of rice at 15,000 naira each. It's straightforward. Now let's go to our Purchase Day Book. Here you now draw your Purchase Day Book, the same format with that of the Sales Day Book. You have what is called the date, the particular, the folio, the details, and the amount. So if there's any detail given in that transaction, you must put the name of the supplier of the person on top. Then you now bring down the detail very well, but in summary. Like here, you don't just say 40 bags of rice. Then coming to detail, you now show exactly what happened in that transaction. Here we now say 40 bags of rice multiplied by 15,000 per bag and give you 600,000, which is the gross amount. Then there's a trade discount of 1%. Come and work it out. 1% in mathematics is the same thing as 0.01 multiplied by 600,000. Then if you now get 6,000, you put it in bracket to show that you are deducting it from the gross amount. Deducting it from the gross amount, you now get 594,000, which become the net amount in that transaction. And that is just it. And mind you, as you finish a given transaction, you must close it to this point, but don't close to the other side, because other transaction that comes on that day on credit purchasing will all come before you add them all. Finally, you come here, so both goods on credit from Ikechukwu Ventures. Ikechukwu Ventures. Now from Ikechukwu Ventures, we're buying goods on credit 100,000. Here, there's no detailed breakdown. Very straightforward. You come here and just put the date on the 8th of March 2026, Ikechukwu Ventures. Then we have what is called the purchase ledger. The purchase ledger 2. I've already explained for you. I know learners don't have issue as far as my tutorial is concerned. The problem with portfolio here. This is purchase ledger 1, which deals with all goods purchased on credit and the related transactions. So in this case, this is purchase ledger 2. You take the amount direct, which is 100,000. At the end of the day, we now sum all the credit purchases together in the net amount. So from there, you add this 594,000 with 100,000, you get 694,000, which become the total amount of credit purchases for that month. The non-column balances, mind you, you must balance it at the end of the month. Account are balanced at the end of the month. Though we end here 8, but we believe that all accounts are balanced at the end of the month or quarter or year, as the case may be. So in this case, at 31st of March 2026, we now say transfer to purchases ledger account. This is also on a general ledger. Purchases is on a general ledger. Now here, we now say this is general ledger 1, then the final total becomes 694,000. Then mind you, you must close with 2 lines to show that the account has been closed for that month. So this is how we prepare books of original entry, these types, which is the sales day book and the purchases day book. Don't forget to follow all my videos, because my task is to come and reduce accounting to the lowest ebb, so that learners will not have any problem when they want to prepare any of their accounts. Don't forget to like my video, go down, give your comment, ask your questions. I will come back and address it. And don't forget to also share my videos, because as you share it to other learners, they will appreciate you by getting knowledge as you share it. Thank I remain Chartered, your accounting tutor.